Is the AI rally finally hitting a wall between a 3-year high inflation and oil prices that are now back over triple digits? Is the easy money phase of 2026 officially over? Today, we're breaking down the CPI shocker and why chip stocks had a huge pullback today. So, in today's video, we're going to dive into a couple of major things that are happening in the market that are causing the pullback in the market. So, first, CPI was released today, so we'll dive into what numbers came out there. Next, over in the Middle East, the ceasefire is at a breaking point and it's causing oil to surge again, where we're seeing both Brent and WTI crude both in triple digits again. Next, we saw during the intraday that the Nasdaq 100 had a nearly 2% pullback. We also saw some of the chip stocks have major pullbacks. Leading the way, we had Micron pulling back at nearly 10% today. Intel also had a major pullback. AMD also pulled back. If we're looking at the semiconductor sector as a whole, there was a major pullback. Next, top of mind for the market is the new Fed chair and the vote. We also had some housing data that got released today, so we'll dive into that and see what we can learn from that. So hopping over to the CPI. CPI came in super hot at 3.8%, moving up a 0.5% from just last month's report. One of the major influences to it was the oil prices that were spiking. The monthly CPI rose 0.6%. This was mainly driven by the oil price surge and energy overall. The core CPI, which is excluding food and energy, also came in hotter than expected at 2.8%. This persistent pressure is casting serious doubt on whether the Federal Reserve will be able to cut interest rates at all in 2026. Not too long ago, we went into the year thinking that there would be multiple cuts. Now we're questioning if there will even be a single cut. And you even start to see some chatter that some people are thinking that there might have to be a raise by the end of the year. Me personally, I don't think we're going to face an interest rate hike at all. If anything, I think we'll be paused for a lot longer than we initially anticipated, even with the new Fed chair coming in soon. If we're looking down at this chart, we have came down severely since our peaks of inflation and have stayed fairly low, but seeing this uptick just recently is not something we want to see, although most of this is energy driven. So if things can resolve over in the Middle East, we should see these numbers come back down. If we're looking up here at the inflation by category, you can see right here under energy, these are dominating across the board for how much inflation is up, specifically in gasoline. In most of the US, people are noticing these gas prices surge at the pump. As a result, with the price of fuel going up, we're also seeing airline prices rise as well. Especially not a good time as we're going into the summer time frame where everyone is booking their travel. Brent is up over $107, but let's look at year to date. Year to date, we are up an extremely high amount, up 78%. Now, if we hop over to WTI crude, we are also over $100. We started the year at around 57, so we're up at 102, getting close to 100% up. So both oils areas have rose a ton due to the conflict in the Middle East. Now, looking at the Nasdaq 100, there was a big drop midday by the CPI news, but we did recover nicely going into the close. So it'll be interesting to see how it plays out the remainder of the week. Do we continue to pull back some more, or do we start a new upward trend tomorrow? If we're looking at year to date, we are up 15.5%. So we're up a tremendous amount already in the Nasdaq 100. This is largely pushed ahead by any of the AI plays that are out there, particularly the memory stocks and the semiconductors. If we're looking at Micron today, Micron had a huge pullback today, down 8%. So you might think, wow, Micron, I thought they were like the top company in the market right now. 8% down? Is their run over? Well, not necessarily. I mean, this is healthy for it to pull back. Let's just pull out to year to date. They're up 143%. If you see the pullback today, that's just a little blip. So even with the big intraday pullback, it barely shows up on the chart for the year to date. And if we go back 1 year, 730%. Intel down 6% and another 2.5% after hours. If we look at the lowest today, looks like they were down about 7.2%. But similar to Micron, if we zoom out to year to date, Intel up over 200%. So again, just a blip on the radar. Yes, huge move on the daily, but always zoom out. As I note up here, rule number 2, always zoom out. And that's why you do it. So big pullback days like this for stocks that have been surging, they're just blips on a radar. You always got to stay focused on the long term. When we look at AMD, AMD has been on a tear that just the past week alone. Today, they were down almost 5% at their lowest, but then they nicely recovered going into the end of the day. So let's see if they can continue their upward move. Do we see $500 by the end of the week? Perhaps, but if the market continues to show weakness, then we could see it pull back to 400. Now, if we're looking at the semiconductor sector as a whole, this 3%, that's a massive move down for a sector as a whole versus just being an individual stock. But at the same time, as we've been doing with the individual stocks in this sector, yes, big pullback. But if we zoom out and look, we can just see, just looking back at 52-week highs and the low. Look at the low down at 4,600. We're up at almost 1,200. That means from this is an index. This is looking at the semiconductor sector as a whole, and we're almost a 3x on this. That just shows how crazy of a run the semiconductor area as a whole has been on. Wow. Now next thing up, Kevin Warsh is the Fed nominee, and he's getting going through Congress to get his confirmation. So today, the Senate actually just confirmed him in a 51 to 45 vote. So he has the final vote coming up pretty soon. We'll have to see when that final confirmation comes up, if there's any more uncertainty around then. But so they confirmed him for a 14-year seat on the Board of Governors. Yep, right here. Final vote is coming up as early as tomorrow. So it doesn't mean we'll get it tomorrow, but it should be coming up fairly soon. Now, the big debate right now with the CPI inflation data running up, oil prices being up high is Kevin Warsh going to be able to get in there and lower rates? It was thought of as, since he's the Fed nominee, of coming in, that T-Man definitely wants the rates lower, because if rates can go lower, maybe we can get a recovery quicker in the housing market. So it'll be interesting how he gets in there, if he'll be able to lower rates, or with inflation being higher, if he's going to be kind of stuck and having to hold rates flat for a while longer until we see inflation come back down closer to that 2% range. So keep an eye out for that over the coming days to see how that starts to play out. And lastly, housing market for April came out, and the existing home sales numbers came in and missed expectations. So existing home sales for April came in at 4.02 million units, missing the consensus estimate of 4.11 million. So this really goes back to the inflation data and wanting to cut rates. And the question is, when can we get mortgage rates to start dropping down? Right now, current homeowners who are wanting to sell are really just stuck right now because they have a 2, 3, maybe 4% max for their mortgage right now. And they're not going to want to sell to then have to go take on a 6 or 7% new mortgage. We have two problems right now. One, a lot of people aren't listing their homes to start with just because they don't want to have to take on a higher interest rate in a new home. So they're sticking it out with their low interest rate. And then the second one is the ones who are listing their homes, they're listing them at higher prices than a buyer's willing to pay, due to the interest rates being so high on a mortgage that their monthly payments are extraordinary. So we either have to have interest rates start to come down so we can get more supply on the market. Monthly payments would be lower for new buyers looking for to buy a home, or we need current people who are listing their homes to start dropping their prices so that way buyers are more likely to start purchasing these homes due to then the monthly payment coming down just because the overall price was lower. So all this noise that we're seeing in the market, CPI inflation data being higher, oil prices being back in the triple digits, tech pulling back almost 2% today, some semiconductor names pulling back nearly 10% today, having a new Fed chair come in and the battle between him and the inflation data and trying to get interest rates lower, and then also housing data. All these, at the end of the day, are very short-term signals. What we always want to stay focused on is always focused on the long term. Remember Benjamin Graham's famous quote, in the short run, the market, it's a voting machine. It can be dictated and moved in up and down patterns by short-term noise signals such as CPI, oil prices, things happening in the world, different economic things happening such as a new Fed chair coming in, interest rates and housing data still being bad. But in the long run, it's a weighing machine. So over time, the market will always correct itself and start to align with the fundamentals of the companies that are driving it. And just like rule number two says about always be able to zoom out, look at this chart of the past 30 years. Look at how many major events happened. All these events are way bigger than anything we even have going on right now. And even these major global events, look at when we just zoom out 30 years, how minuscule they are. If we're just looking at recent time frames, even when we're looking back to the COVID drop, look at this. Remember when COVID-19 caused the market to go into a huge panic? Everyone thought the whole world would be shut down for years. Look at this drop, and then look at how quick we recovered and how far ahead of that we are now. That huge drop at the time doesn't look so big now that we're a few years out. If we go back even to the global financial crisis, remember how huge of a drop that was? Now, years later, we're many multiples higher than we were before. So, the point of that is all this short term noise that you're hearing in the daily news about CPI inflation, oh, tech stocks are pulling back, time to get out of semiconductors now, the oil prices are going up, we're going to be in triple digit oil prices for an extended period of time. All this is just noise that's happening. When you zoom out and you stay on the long term, just stay the path and let compounding work for you. So I hope this quick little update about what's happening in the world, what might be the current concerns, and then the clarification of just don't worry about this, zoom out, focus on the long term, stay the course, and let compounding work for you. Because in the long run, if you stay focused as being a long term investor, not a short term trader, you are then playing the winning hand and you are not acting as a gambler who's destined to lose. So that's all I got for today. Appreciate you watching. Please hit that like button down below, hit that subscribe button, and leave a comment down below. Do you think anything happening in the world we will even remember 6 months, 12 months, or 2 years from now? Let me know down in the comments, and I'll see you in the next one. Thanks.